Welcome to Santa and the Millennial Elves. We start with a Christmas story. It was September 15th, 1984, and time was getting short. Usually by the middle of September, all the raw materials and supplies had been purchased, and over 80% of the toys assembled. This year, Santa knew he was in deep trouble. He needed $1 million and only had 100,000. He looked at his production schedule and surmised that he could somehow make all the toys needed for Christmas if he had the cash by November 10th. As he was going through his mail, he noticed there was an investment seminar in Los Angeles the next day. So he got into his sleigh and took off for LA. Robert Prechter, seeing Santa at the door in his bright red suit, instructed the ticket takers to let him in at no charge, telling them that Santa was his personal guest. Santa was taken by Robert to the dressing rooms, where he met all the great advisors. He told them of his dilemma. They all shook their heads and told them they couldn't turn 100,000 into $1 million in a month or so. One of them made a joking comment that there was only one man who even believed that was possible. Santa asked who that was, and the reply was Professor Alan Andrews in Florida. Now, Santa knew that as a man believeth, he shall conceiveth. So off he went to see Dr. Andrews in Florida. Dr. Andrews welcomed him with open arms and offered him a course, which at the time he was willing to sell for $1,500. Santa looked at the 60 poorly copied sheets of paper, called the Andrews course, and shook his head no. When the professor then took out a list, it got Santa's attention. It was a list of his students that were also brokers. Santa told Professor Andrews that, well, he bought Rudolph through a broker, and he swore he would never deal with brokers again. Then Santa kind of scratched his head and said, there must be a bright student that the professor has taught. All of a sudden, there was a gleam in the professor's eyes, and he gave Santa the name and address of a student who used computers to test the professor's methods. Santa got in the sleigh, and across America, reindeer and all, he went, and he flew to see the student of the professor who lived in San Diego. After a gracious welcome, Santa told the student about his need for $1 million. Santa and the student were sitting in the backyard of the student overlooking Lake Hodges. And the student mentioned in the futures markets 100% in less than a month is quite a challenge. Well, seeing it as a challenge rather than as a problem, Santa liked that attitude. So the student took Santa's 100,000 and went to see a friend at Merrill Lynch in downtown Rancho Bernardo, where he was able to set up an account for Santa immediately with no commissions being charged. That in itself was a miracle. So time went on, and on September 25th, Santa was at home, and he received a statement from Merrill Lynch informing him that he had sold 30 December Treasury bonds at 68.24. He was quite puzzled, and in the mail he also found a letter from the student that contained two charts, figure 1 and figure 2. Figure 1 looked like this. The explanation with the charts said, I put the order in at the intersection of the median line parallel and the two P lines. Figure 1 showed 4 pivots going to a pivot 5, another good signal. Figure 2 shows prices had gone up to where we sold. Here's figure 2, went right up to that line, and that's where it was sold. Santa was puzzled at the idea of selling bonds that he didn't own in order to make his $1,000,000. Time went on, and on October 9th, Santa received another statement in the mail from Merrill Lynch informing him that he was now long 50 T-bonds at a price of $66.17. He noticed that his account balance had grown to $166,562.50. He still didn't understand this buying and selling of bonds. He looked through his mail and found a letter from the student, which had figure 2 and figure 3 in it. The student wrote, "We bought the bonds just above the intersection of 2 course lines, the ML and 2P, on figure 3. Since 5 pivots were made in figure 1, an ABC correction, as in Elliott wave theory, was probable at this point. Well, time went on and Santa hadn't received any mail for a while. He was about to call the student when on October 28th, the mail came bringing him the news that his account had grown to $404,062.50. In the mail was also figure 4 with an explanation that said, after 5 pivots up, prices turned at the intersection of the ML and a warning line. It was a good place to sell. While Santa agreed, he wasn't quite sure if the student was going to be able to meet his $1,000,000 goal by November 10th. A few days went by, it was Halloween, and all the elves were in costume, when Santa received more good news in the mail. A notice from Merrill Lynch that he was now long 190 Treasury bonds at $69.18, and his account balance had grown to $625,000 and $312.50. Okay. He also found a letter from his student, the Andrews student, with 2 charts labeled figure 5 and figure 6, with an explanation that said, when prices go up through the reaction line to make a pivot, as in this case, pivot 5, right up here, they often come back to it. I put your order in to buy near the intersection of the reaction line in figure 5 and the median line, or ML, in figure 6. Santa didn't understand a thing about pivots and these strange lines, and he did understand that Merrill Lynch wouldn't send him these brokerage statements if they weren't correct. Finally, on November 9th, he received notification from Merrill Lynch that his account had been closed and he could pick up a check for $1,070,625. He was very happy knowing that he met his deadline. He called the Merrill Lynch office where he had his account and arranged to pick up a check the next day. He went through the rest of the mail and found a letter from the student. It included two charts, figure 7 and figure 8, and said, I closed out your long position at 71.29 because prices were not making it up to the median line and clinging to the MLH. Near the intersection of the MLH and the reaction line seen here, I sold. On November 10th, Santa went to the Merrill Lynch office. In exchange for not charging him commissions, he had his picture taken with the bull. After all the fanfare, he went across the street to the office of the student who helped him out. As he walked into his office, Santa noticed the student was very sad. Santa asked him why. The student answered, the professor taught me well, as you can see, by the results you received. He is now over 90 years old, and I am to teach the course. I can teach people to count pivots and draw lines, but how do I give them the confidence and the belief? Well, Santa answered, tell them about what happened to me and show them the charts. And now moving on to the Millennial Elves. The fearless Millennial Elves. As the fearless Millennial Elves grew up, they were around Santa's workshop and they noticed these charts. And they noticed the letters that Santa received from the student. One of the charts was figure 9, and notice it had a line that went through these pivots here, and there was a pivot point here and another line here, and this was considered the action line, and that's considered the reaction line. Anyway, they did a bit more research, and they found that they could use advanced analytics for predicting future behavior of groups. After all, that's all prices are in the markets, groups. And analytics is the discovery, interpretation, and communication of meaningful patterns in data. It also entails applying data patterns towards effective decision making. In other words, analytics can be understood as the connective tissue between data and effective decision making. Now, the elves saw patterns in the data that were pointed out with the median lines and the action-reaction lines. And they discovered that price action provides a meaningful source of data concerning the actions of the participants in a specific market. These participants, as you know, are groups of people. When in groups, people's behavior is viewed as group behavior, and group behavior is often predictable. Predictable group behavior is discoverable by using pattern recognition. Let's see some examples. Growing up, the elves learned to predict the future with pattern recognition. They knew when they came to the table, they were often utensils. And these utensils could tell them what meal they were going to eat. They knew there was cereal for breakfast when they saw that spoon. And when it came to lunch, they knew it was going to be soup and salad when they saw this. And when it came to dinner time, sometime there was crab, and there would always be these utensils on the table. And they knew exactly after a while what they were going to be eating. And, if somebody thought there was going to be soup for dinner, well, they knew that wasn't going to be the case when they saw these utensils on the table because there was no spoon. And that knife is perfect for cutting steak or chicken or even lamb. Now, moving on, this is a pitchfork, as different from a regular fork, but it is something that is recognizable visually, and it is used to find the slope of a move in prices. So you have 3 points down here. The first one we'll call point A, second one up here, point B, and third one down here, point C. If we simply take the value of point B and subtract the value of point C, we will get this value here. And so by taking a line from point A, putting it through that midpoint that was calculated, there goes the slope. Now there's an upper line called an upper MLH, if this is called the ML, middle line or median line, and this is a lower parallel, also called an MLH. Now remember that a pitchfork has a middle line. And in a bull market, the middle line is often a good place to buy. This is because, in most cases, price come back to the median line. The elves noticed how the ML was used by the student in figure 3 and again in figure 6. In both cases, it was a buy. Now, in a bull market, remember, the middle line may be a good place to buy. As we see here, this is an ES chart, sometimes known as the S&P 500. Good place to buy. A reliable middle line often has multiple pivots on it. Is something the elves discovered after looking at lots and lots of data. So let's look at this. Here's a high pivot, high pivot, high pivot, low pivot, and here's a pivot. And so this winds up being a reliable middle line for finding the turn, the reversal point. And up we saw prices go in the next move. A reliable middle line often has multiple pivots on it. Here's a high pivot, low pivot, and here's a middle line. As you can see, prices have started to come down a bit here. Here's the extended version of that previous chart, and we see a different middle line over here. We see price has come down to it and stopped. And we see over here, as we draw the new middle line, we see a low pivot, low pivot, low pivot, low pivot on the line. A reliable middle line often has multiple pivots on it. And so if you draw the pitchfork using low, high, low, since this is a reliable middle line, or could be, this would be a good, and price has come down to the other median line. This is a good place for price to turn. And so it appears as if someone put on a long position here at this price, 64.18. Right about there, a little bit above where the price closed that day. And remember, we have learned that after prices makes it to the middle line, draw the next pitchfork and check for multiple pivots. So we see here that prices have made it to the middle line. And we can see on this one here, we have a low pivot, low pivot, low pivot. And here's another low pivot. And in the next chart, we will draw another middle line. Only this one will use the high here the low here, and the high here. And let's see what happens. Yep, here we have the high pivot, high pivot, high pivot, right on that middle line, and then there we go. Let's see another example of this. After prices make it to the middle line, draw the next pitchfork and check for multiple pivots. And so first you have this middle line here where you have a high pivot, low pivot, low pivot, and finally a pivot down here a little bit past the median line. Then the next median line is drawn, and note there is a high pivot, and a low pivot on that median line. And so what does price do? It goes up to that next median line. Lowering risk. The Elves, using Janish analytics, have found a number of patterns of group behavior that regularly occur on price charts. Price charts are used because of the availability of accurate data over the last 50 years in various time frames. The price charts used have bars that are time units between 1 minute and 1 month in size. Now, utilizing a number of time bars, patterns are found. After the recognizable pattern is considered in place, it is utilized as a setup for the reversal of price action. The examples shown today are the simpler versions of the reversal patterns that have been discovered in order to communicate to a wide audience. After a reversal pattern is found and a new trend has been determined, it is possible to take the smaller swings with the trends at a lower risk for each trade. So here's an example of the actual trade using daily bars. See here it went long at 64.18, which is a little bit below where in this area here. Okay. Now, after that, clearly see a few days up was up 2%, or maybe a little more. This is a daily chart. Let's look at this with it using an hourly chart. Well, with an hourly chart, we can draw that line here, and we see a high pivot, high pivot, high pivot, high pivot, low pivot. So this is considered a reliable pitchfork line or a reliable action-reaction line, a center line for action-reaction. And we draw a line with these 3 points, and we see that prices go right up to the reaction line and reverse to the downside. Now the Elves learned about these reaction lines from figure 7 and figure 9. Here's figure 7, prices went up to this reaction line and reversed. And here's figure 9 showing the multiple pivot line and the action line and the reaction line where price reversed. Now, here's the hourly chart once again, and as price came down, the action-reaction line was drawn as well as the median line. And right in that intersection area, went long at 65.24 and is in now with a very low risk point and has taken profits on the move from going from down here up to here. Thank you.